for the actual setup, I mentioned that we need a catalyst. So the catalyst can be earnings, the catalyst can be a tweet. The catalyst doesn't necessarily matter. It just needs one because obviously we need something to shock the stock. If we look at First Solar, we were in a bottom down oscillation testing the 60 prior to the earnings play on July 28th. Earnings came out. First Solar beat by a lot. Couple that with the Biden administration saying, hey, we want to pump money. And all of a sudden the stock gaps up huge. It gaps up 15%. Now, if you look back on this chart, I sent a few different time frames to you. Does this chart typically gap up double digits? And you can kind of look at that and just eyeball test. No, it does not. No. So there's definitely something there with this gap up. Why did this stock gap up so much? Now, we can go back and find that catalyst. And in some instances, it does matter. But just from a pure technical standpoint, we don't necessarily care. What we do care about, though, is we have to identify that gap. So we did. We identified it the very next day on August 28th. And we said, listen, something's going on with First Solar. We need to have this on our watch list as a potential COD. So this is the next arrow here is when we were talking about it in the group. An important feature of the COD is to not chase this. We do not chase the gap up because what typically happens and what we see is that in the short term, profit takers will come into the market and they will completely dump the stock back below the gap and just kill everybody that chased. And I can't think of a specific ticker, but this happened to me. Man, this happened to me like last year. I think Q3 or Q4 had a huge gap up in a tech stock, and I bought the COD. I tried to front run it, and I got gap down, and my options contract expired worthless because in one day I bought into the FOMO, into the pop, and so I'm chasing the premium. I'm paying way more money than everybody else that got in prior, and then the market decided, we're not too sure we want this at this price anymore, and then they dumped it on me, and I was a victim of FOMO. So what we do for these CODs is we wait like a cobra, and we stalk this chart. And what do we see? What do we want within TTI? We love to buy horizontal channels. We love to buy straight line breakouts, right? Because they're easy to identify risk. So I went and I highlighted this box area. This is what we want to buy. And you've been here now for 2 weeks, 2.5 weeks. This period of horizontal channeling should seem familiar. We love to buy these breakouts because there's no real confusion as to where the breakout is. We know where it is. We can identify a resistance area at 102. Everybody identifies the same resistance area, which is good for us because we know, well, if we want it above 102, if it doesn't continue above 102, we're wrong. We get out at a minor loss. If it does, congrats. We use that as a winning risk on level, and now we can use our stops to protect that entry if it does continue on up. To the downside, there's a support level at 95.50. Now, if you were looking to short for solar, which we are not, or we're not rather, you would be looking to buy puts or short if you're trading equities at the 95.5 break. So what we look for in a COD is a gap up. It doesn't matter if it continues to run for a day. In this case, it was 2 days. It doesn't matter if it runs for a week. We do not chase. We wait for price to consolidate. This is a symptom of profit takers coming in and the market cooling off slightly. The guys that bought prior to the pump are taking profits. The guys that identified this gap are starting to get in. We don't care. We just identify that consolidation and we're ready to strike. And what did we do? At least what did the guys in the group do? I did not do this. They bought this support area pullback. So I put a rectangle around the rectangle just so you can get a perfect idea of where they were looking to buy. So this is a little bit higher level. And I would not have done this even if I was trading this. But that's not to say it doesn't work. This is essentially, they were playing it as a BRB. We have a support level at 95.5, and Dustin, IW Beyond, said, hey, I'm just going to buy the pullback on a big red day because the contracts are cheaper, which is true. And if it breaks below 95.5, we know it's not going to break out. The idea of a horizontal channel breakout at 102.50 is not validated anymore. So this is a low risk trade for me. And I said, sure, that makes sense. You buy the pullback. If you're wrong the very next day. But if you're right, you just bought the bottom of a channel on a red day. And so those contracts were probably 50% cheaper for him. And those types of plays add up at the end of the year. Because even if you're buying, let's say the contract's $50 on a Tuesday. And then on a Wednesday, the market pulls back and those contracts are now $30. You're thinking to yourself, well, come on, man, $20 isn't that big of a deal. But over the course of a year, those like 30, 40, 50% discounts add up. And your profitability at the end of the year skyrockets, specifically if you're looking at your risk to reward. Because now instead of, let's say, he was targeting the 120 area and he bought it for $50, maybe he was looking at a 3-to-1 risk to reward. But by getting that 50% off, now he's looking at a 4.5 or 5-to-1 risk to reward. And that type of stuff matters. So he bought the pullback at 95.5 and the rest is history. We broke out. First Solar came up, tested all-time highs, and now everybody in the group has a decision. A lot of guys already closed a majority of their positions in profit, 200, 300, 400%, but also by closing those at 200, 300, 400, 500%, whatever they had it at, they can now hold the rest of their positions essentially risk-free because they've already paid off their initial amount of money and taken profit. So now they can hold these for a little bit longer. First Solar is consolidating right now below an all-time high, which is never a bad place to be if you're in profit and have time on these contracts. So that's the COD. Catalyst, horizontal channel breakout, ride the wave. But remember, the most important part in the COD is not necessarily the catalyst. It's to wait for the horizontal channel to form, and that's the hardest part too. Because if you see a huge gap up, your brain innately says, well, shit, I hope I don't get left in the dust. And sometimes we will. But I would prefer to get left in the dust than buy a contract that's already up 100% and then get dumped on. Oh. So that's the COD. And this is a relatively popular chart pattern because catalysts can come all year. It doesn't matter. Generally, they're around earnings, but yeah, so COD, you're going to encounter this setup a lot.
And this one doesn't have a set Fibonacci price target. You just kind of watch the price action or going into previous, like in this case, all-time highs, I think. Or
so I don't think they ran a fib, but I'm going to go ahead and draw a fib here, and I want you to see something and why it doesn't necessarily. I love fibs, as you can see, I use them all the time, but it doesn't necessarily make sense in this specific setup because if you draw a fib, so you said you wanted an extra opinion on fibs. I know you know how to use them, but generally speaking, your fibs are going to be placed at range high and range low. Like that's it. And you don't want to get too cute with them because a lot of the time fibs are self-fulfilling prophecies. A lot of the time other traders are using the exact same levels as you. And so whether or not you want to undercut or overshoot those levels, depending on how intelligent you think the other guys on the side of the trade are, and you can argue that all you want, but you don't want to get cute. Sometimes you'll see guys throw Fibonacci levels like on random levels that don't make sense, and it's like you're not doing yourself any favors here. In this case, if you throw a fib at the 90 or the one at like the 102.5 area and the 0 at the 95.5 area, you get this really mushed up sort of price target, right? Where it just you're buying the 102.50 breakout and you're targeting the 105.50 area, and it's so close. And if you look at the ADR of First Solar, it's 4.94, which means on any given day, on average, from peak to trough, price moves 4.94%. So if your breakout is around 102.5 and your 1.618 fib is 105.50, you're looking at a 3.5 or 4% move. Yeah. That's less than an average daily move. Is it really worth it to run a fib in that case? I would say probably not. Yeah, because this wouldn't be a swing trade. This would probably be a day trade or something because you'd be looking to cut this intraday. So it just didn't make sense in this case because there's just not enough. You're not letting the trade have enough room there. So as of right now, their risk level was the original 92.5 area where they bought the pullback, and they were targeting the all-time high area at around 120, which we came up and hit a few times. So successful COD for the guys. And like I said, you're going to see this set up a lot. So any questions regarding this?
Nope, think I got it. Just gotta catch it in live now.
Yeah, exactly. You got to trade through it a few times, and unfortunately, you're going to catch these and you're going to win, and sometimes you're going to catch them and you're going to lose, but you're going to start getting the feel for it.
Yeah.
But a lot of the times, these things, because they have a positive catalyst, headlines are huge. You know that headlines move markets. So if we can catch something just as the headline's coming out and validate it with a technical setup, you just sit there and kind of wait a week for that information to slowly disseminate across the internet, and all of a sudden you realize, like, well, shit, Wall Street Bets likes First Solar. I'm glad I bought 2 days ago, and like you get like all of the volume coming in because all of a sudden, for just imagine this. Biden administration is pumping money into the area, and First Solar is at an all-time high. What headline do you think is going to come out? First Solar all-time high, backed behind Biden administration pledge to block. And all of a sudden, you're like, I'm glad I bought it 95.5. Because like, you're going to see this happen a lot.